All right, let's jump straight into this. Welcome to The Explainer. So if you've spent literally any time on social media lately, you've definitely been bombarded by the wild, high-octane world of retail day trading. You know exactly the culture I'm talking about, right? The rented Lamborghinis, the big promises that you can quit your 9-to-5 by next week, the secret strategies that supposedly guarantee a 100% win rate. It's this massive, seductive industry built completely on the allure of instant wealth. But when we actually look at the raw data and expert analysis, that whole flashy facade strips away pretty fast, revealing some hard truths from the pros who truly understand the mechanics of the market. So let's explore what they actually have to say.
But we actually need to dial the energy back for just a second here, because we have to face a really sobering reality. 90%. That is the brutal, undeniable statistic hanging over this entire industry. 90% of retail traders fail, and they don't just fail, they lose all their money in the markets and completely quit. The glamorous videos always seem to leave that part out. The matrix of trading content is practically designed to make you think you're the exception, but mathematically, you are almost certainly the rule. So why is this failure rate so staggeringly high? And more importantly, how do you actually survive it?
So here's our roadmap for the explainer today. We're going to hit the day trading illusion, then expose the fake gurus, look at the strategy trap, figure out mastering the trading mind, and finally, wrap up with discipline over dopamine.
All right, Section 1, the day trading illusion, expectation versus reality. The core issue here is just this massive disconnect between the dream you're being sold and the grueling, honestly unglamorous reality of actually navigating the financial markets.
It's actually kind of fascinating to map out a trader's real timeline based on expert accounts. Day 1, you discover the market, and man, you're just full of optimism. Month 6 is what they call the illusion of progress. Maybe you win a few trades, kind of feel like a natural. But year 8, that is the plateau of latent potential. And no, that's not an exaggeration. Veteran channel Day Trading Addict openly talks about spending 8 agonizing years just losing money before finally finding consistency. 8 years. Real trading isn't a get-rich-quick scheme. It is a massive, long-term commitment that requires surviving years of failure. Okay, moving on to Section 2, exposing the fake gurus, selling dopamine, not discipline. We really have to talk about this toxic ecosystem that's directly responsible for pushing so many beginners into that 90% failure bracket.
When you compare fake gurus to the real pros, it's literally like night and day. The gurus, they're promising you 100% win rates. They're trying to sell you secret indicators that the banks supposedly don't want you to know about. Meanwhile, the real pros are preaching something, well, incredibly boring. A strict 1% risk rule and an absolute obsession with preserving capital. They'll tell you straight up that taking a loss is just part of doing business. The gurus just pretend losses don't even exist.
And this toxic behavior is literally the guru playbook. Channels that are big on transparency, like iMan Trading, expose this exact cycle all the time. These influencers exploit your psychological weaknesses, mostly that urge for quick action, just to sell you insanely expensive mentorships. They flash fake prop firm payouts, and, you guessed it, they conveniently delete any videos where they actually lose money. They're not in the business of profitable trading. They're in the business of selling you the dream of profitable trading.
Which brings us to Section 3, the strategy trap, the illusion of progress. So once you manage to dodge the fake gurus, you run right into the next huge hurdle for beginners, the endless, exhausting search for that perfect, holy grail strategy.
Trading educator JFX totally hits the nail on the head here. He calls bouncing from strategy to strategy the trading equivalent of running on a treadmill. Lots of motion, zero distance covered. You're flicking through 10 currency pairs an hour, slapping on 5 different indicators, doubling your trade count because you feel like you're in the zone. And yeah, it feels like hard work. It gives your brain this massive dopamine hit. But you are literally going nowhere and ultimately just ruining your account.
Let's get real about the data behind these strategies. The internet is flooded with these super complex, intimidating buzzwords. You'll hear about smart money concepts, or SMC, the classic Wyckoff method, or even hyper-niche terms like turtle body soup. Yes, TBS. But if we actually peel back the layers, almost all of these strategies are just different ways of reading the exact same thing. Basic supply and demand. The market is just an auction, guys. Seriously, do not let fancy buzzwords convince you that you're missing out on some magic secret. And that leads us right into the time frame trap. The experts always emphasize that the market is fractal. All that means is that price action and patterns repeat exactly the same way, whether you're looking at a 1-minute chart or a 1-month chart. So agonizing over the best time frame? Complete trap. A 1-minute chart and a daily chart map the exact same human behaviors of fear and greed. It's just happening at different speeds.
All right, Section 4, Mastering the Trading Mind, the true battleground. If the strategy isn't the secret, what is? Well, the real battleground, where profitability is actually won or lost, is completely inside the human mind.
The legendary trader Jesse Livermore left us with this piece of timeless wisdom that pro trading groups still analyze to this day. You don't need more trades, you need fewer. Honestly, this is probably the hardest lesson for a beginner to wrap their head around. Trading isn't about constant action. It's about profound, almost uncomfortable levels of patience. So I want you to ask yourself something and really think about it. Are you trading to make money, or are you trading for dopamine? It's a tough question, right? But so often, without even realizing it, traders are basically just paying the market a fee to feel the thrill of the gamble. They're just treating the whole thing like a very expensive casino. Because when you're just hunting for that dopamine hit, you walk right into these account-destroying mental traps. Revenge trading, for instance, taking a terrible trade right after a loss just to win it back. Or action bias, feeling like you absolutely have to be in a trade to be a real trader. Then there's exiting your winners way too early because you're terrified the market's going to snatch your tiny profit away. Channels like Mind Over Markets and Stick Trader point out that these aren't logical decisions, they are emotional reflexes. It's literally your nervous system reacting to fear and greed. Which brings us perfectly to our final section, Section 5, Discipline over Dopamine, the blueprint for survival. So how do we actually build the bulletproof mental systems you need to survive this matrix?
Well, it starts right here with the Kaizen approach. Explored deeply by trading psychology experts, Kaizen is this amazing Japanese philosophy of continuous incremental improvement. We're talking about getting just 1% better every single day. This is basically the ultimate antidote to that toxic get-rich-quick mindset that social media tries to shove down your throat. You don't build discipline through some bursts of temporary willpower. You build it through tiny, boring, everyday habits.
And that ties right into a super powerful mantra popularized by veteran trader Jay Dunn Trades, DOD, or Discipline over Dopamine. This literally needs to be your daily verbal anchor. Every time before you click buy or sell, you have to prioritize preserving your capital over the sheer thrill of entering the trade. You actually have to actively choose discipline over that chemical hit in your brain. So, mechanically, here's how you actually do that. This is the survival framework, the step-by-step process that separates the emotional gamblers from the cold, calculating professionals. Step 1, plan your narrative on a higher time frame. Step 2, wait for your specific trigger, absolutely no just-in-case entries. Step 3, execute the trade but strictly risk only 1% of your capital. And Step 4, just walk away. Let the trade play out, do not micromanage it to death just because you're feeling anxious. The reality is, professional trading is intensely, unapologetically boring. Look at how a pro spends their time. 90% of it is spent waiting, just sitting on their hands. Only 10% is actual execution. If you're constantly frantically clicking your mouse, you're not trading, my friend. You are playing a video game. So, we're going to wrap up with this final provocative thought based on everything we've uncovered today. The market is always going to be there, right? Moving up, moving down, completely indifferent to you. The only question that actually matters is this. Will you build the quiet, boring discipline it takes to survive long-term? Or will you let your dopamine take the wheel and become just another statistic in that 90%? That choice is entirely up to your psychology. Thanks so much for joining me on this explainer, and keep learning.